G'day mates, Ben here from East West. Just going to have a look at CCJ. Now before we jump into it, Merry Christmas to all of you. I hope you have a good Christmas break, and if you don't celebrate Christmas, well then just enjoy your long weekend. Now before I jump into it, a quick shout out to Red Devil, who gave me a bit of a shout out in his last video, and I've been through and checked out some of his videos, and you know what, I think they're pretty good. So they're a bit different from mine, but you've got to seek out lots of different opinions out there, I think, and look at different ways of looking at stuff. So I'd encourage you to go and check out Red Devil's channel. I think some of his videos are neat. They're a bit shorter than mine, but you know, I think that they hold a bit of value there. So something else to look at, and big shout out to Red Devil. Thank you very much, my friend, and looking forward to seeing more of your videos in the future. So I just wanted to concentrate on CCJ today. Now, one thing that sort of struck me as been looking at this is, you know, we've had this line here, a bit of a line in the sand of support, but obviously we also failed to get really above this top. So we had a trading range set in here. Now, one thing that I'm going to do here, just as a point of interest, some of you may have heard of Wyckoff. Some of you might roll your eyes. But look, I'm just trying to provide you with something a bit interesting and a bit different. And I'm just wondering if what we've got going on in here is a Wyckoff distribution schematic. Get that out. It's kind of interesting. It fits the pattern quite well. So I might just take a look at that. Just like I said, it's something a bit different and a bit of a point of interest. And then we'll see how that might go together with some of the bigger picture stuff. So if anyone does have any interest, I'll put a link to this page. This is just chart stocks page on Wyckoff. There's a fair bit about it, but what we do have here are the schematics. Okay, so I'll just run through how I've seen maybe, this is an accumulation schematic, but I'll just have a look here at what might be happening here in terms of a distribution schematic in CCJ, and then we'll just go through, you know, what's going on with these things. So like I said, I'll put a link to this page here if you're interested in just having a look. Like I said, it's just a point of interest. It's not really, I wouldn't say it's something that I'd be trading off. Plenty of people do, but it's probably more prevalent in the crypto market. But, you know, this looks like it's formed up pretty well. So let's just jump in and have a look at this and see what we can see. So the first point of call we got here is the PSY, which is the preliminary supply. So that has been described as where large interest begins to unload shares in quantity. So I will say this, the volumes tend not to be as lined up as you might think in the textbook. But I think, to me, looking at it, we had a top here, you know, that provided some stiff resistance. And as we just look at the volumes coming in here, you can see that just through this level, there was a bit of a volume node through there. I'll just clean that up. So, you know, there was definitely some people starting to unload here. I mean, the volumes overall don't look super good, but like I said, this is just a point of interest, but there was definitely some selling through this point. So at this point, I'm just going to label this area as the PSY, the preliminary supply. So the next point we get is what's called the buying climax, the BC. So that's during which there's often market increase in volume. Like I said, I'm not really on that. But, you know, the force of buying reaches a climax. A BC buying climax often coincides with great earnings report. Well, I'm not going to go into that either. But, you know, that this looks like what I would think is this point, the buying climax. So I'll mark that out. So we can see from the schematic that this often marks sort of the top of the range with a couple of what's called up thrusts here. So we'll just mark that off. And now the next point we get is the automatic reaction. So that's intense buying substantially diminished after the buying the buying climax and heavy supply continuing. An automatic reaction takes place. The low of this sell-off helps to define the lower boundary of the distribution trading range. So what I think is interesting here is at this point here, this did set our boundary for the trading range. Now, of course, we did get the little wick here, so you could put it there, but I'm just going to leave it there for the moment. So the next point comes the secondary test. So that is described as price revisiting the area of the buying climax to test the supply-demand balance. And also, I should mention that this automatic reaction sets phase A, so that would be sort of phase A. Then we had this retest. We didn't quite get there, but the secondary test of this top. And then the next thing that happens, we're now in phase B of the schematic, and we get what's called the sign of weakness. So that is observable as a move down past the lower boundary, which we sort of just tickled through there, even though obviously we got it there. So it's said here in the literature that the automatic reaction and the initial show of weakness indicate a change of character. So we kind of had it here like it's pretty slight, and obviously we're on an hourly, but a lower high and a slightly lower low. So just a sign that the market's starting to struggle a little bit. So at this point, still in phase B, we get our first up thrust. Okay, so that is described as simply in where price moves above the resistance represented by the buying climax, and then it quickly reverses and to close below resistance. So we pushed up, we failed, and we came right back to test back into this area. And then to round out phase B, even though it's not shown here, we had another sign of weakness where we just trickled back to the bottom here. So now here in phase C, we got the up thrust after distribution, as it's called. So that is basically, it occurs in the later stages of the trading range, and it provides a definitive test of new demand after a breakout above the resistance. So, like I said, it just looks like, you can think of that as like the final push to test if there's any more fresh buyers coming in. So, like I said, it just looks like it's following the schematic to me. So that would be phase C. So it's almost, think of it as a shakeout, like just trying to suck some more longs in to sell into. So that kind of lined up like that. And then in the next phase, we go into phase D, where we start to drift away. So here we got the LPSY, which is the last point of supply. So you can just see here the market's tried to push, it's failed, and then we've got another sign of weakness here where we've just driven back below the trading range, and then we've got a further last point of supply, which is kind of like today, where it's just sort of tried to push back into this range, but it's just failed away, and that would be phase B. Now phase E, which we're yet to see, would of course be the markdown of the market, that we fail away from this range. So look, take what you will out of that. I just thought it was interesting because I think you can sort of make the case basis the schematic that this sort of price action has sort of happened here in CCJ while we've been at the top. So, what does all that mean? Well, I mean, it could mean nothing, right? It could just be a load of rubbish, and I'm sure plenty of you are sitting there going, yeah, whatever, mate, and we could just do this. So I'm not suggesting that just because this schematic looks like this schematic that we're definitely going to plummet away, but I'll just take this on board as being something of a bit of interest and think, okay, well, if this did play out, then what could we expect out of the market in the near term? Now, just keeping up with the news flow that's been coming out for CCJ, we can see here that BMO and RBC had price targets. So BMO set a price target at $72. I think RBC was setting $70. So those price targets, and there's an older one I pointed out before, it's $68.50, $70, $72. So you can see that they've got, those analysts have got those price targets above. So what I would do at this point, just take this out to a weekly so we can see a little bit better, is think, okay, well, if the market was going to reach up to here, how would we do this how would I put together some sort of case in an Elliott sense that would make me think, okay, well, maybe this is the right path for price. So I've come up with this slightly new Elliott count, and like I said, this is not me trying to predict the market. Even though it might look like prediction, it's not that. It's just, I'm more just mapping out what I can see and thinking, well, okay, what sort of path would I expect price to take to be able to get up to those levels? So I'm just kind of wondering now if what we're seeing here, basis that schematic, is akin to what we saw here, which was basically a big flat correction, and we're going to get a bit of a repeat of that. Now, you could almost make the case that we've already done that, and yeah, that's entirely possible. I mean, even just looking at this, maybe like I've said, this is how it sort of goes together, because I'm just sort of looking at this thinking, okay, well, if this is going to retrace sort of 50% of this swing, and I'm not saying it's going to. If it did though, like what have we got sort of down here? Well, you can see where all this sort of price structure lines up here, where we just sort of held. We had resistance here. This is into the breakdown point that we had from here. So would it make sense for the market to test back into that area? And if it did, what would that represent? Well, I think maybe you could then make that 4 of a bigger degree. Okay, so that would change how I'm sort of labeling up the movements a little bit more, but to get to those price targets, I mean, the way I was putting it together, you'd start to make the case for a big top here, but and it still could be, of course, but I'm just sort of looking at this thinking, well, if this is going to be a big top, how am I going to get up to those price levels? Well, maybe it's not a big top, maybe it's just another intermediate top there, and we're going to get that sort of this style correction where we've just got this longer leg down, and it's sort of unfolding, but we'd have to go a fair bit further for me to think that. So then all I've really got to go off then is I just think about, well, okay, what do the textbooks tell me that I should be looking out for if, always a big if, that was going to play out that way? Well, what we would do is if this is going to be 1, 2, okay, with the rip for 3, we take that and we'd be looking for the most likely point for wave 4 would be somewhere in this area, but it could only, maybe it only gets to the 23.6 of this part of the impulse. Okay, so that, of course, would, when you look at that, and just taking a fractal of that, if you've got something like this, but maybe it only gets down and touches the bottom of that trend channel. Maybe not. Maybe it just rockets further on and this is not right, or it's just, and it has happened just at a much smaller degree. So, I would just go, okay, well, if I look at that, I go, okay, well, yeah, what else have you got going on there? Well, certainly if we came back into that range, I mean, it's pretty obvious that we had sort of this, and so maybe does price just come down and retest into this zone? And if it did, what would that mean? Well, another way, if that was going to happen, then I'd expect obviously an extension in wave 5. So one of the ways that we can sort of map out possibilities is if we take the whole impulse, okay, now if we're going to get an extension in the 5th wave, then a lot of the time, one of the clues, it's just a clue, a lot of the clues is to put the 61.8% retracement at the bottom of wave 4 of the impulse, and then we'd expect wave 5 to reach all the way up to this point. So when we do that, okay, we even get above the price targets, but it puts us in that general range. Like I said, I mean, I don't know what's going to happen, but it's just more. And like I said, this is why I'm not trying to predict it. I'm trying to just map out possibilities. So it's like, well, okay, well, if this did happen, if we got an extended wave 5, then all of a sudden we're going to go up and get those price targets. So that's just how you put it together. You know what I mean? Like, it's just, I'm not predicting that's where we're going. I know those shops have predicted that, but it's just more like a case of, okay, well, how can we get there? Like, what could we do? Because, I mean, there's 100 different ways it could get there, but I think the way I had mapped it out is that it's hard for me to map it out to get there without some sort of major correction, and it's just the way the market is, the way it sits. Seeing some sort of major correction, it's difficult to see it, right? I mean, the market's just trending high. Uranium's going higher and higher. The general stock market is now ripping all-time highs again. It's difficult to see a major correction. So that's why I'm thinking, okay, well, how am I going to how do I get up here without, factoring in a major correction? And that would be one way that you could possibly do it, which sort of takes us up into that range above sort of around that $70 mark, which is where all these shops have got their price targets, and they're all thinking that Cameco is going to keep going. So, the other thing too is maybe that is the bottom of wave 4. Okay, now I wouldn't have said that I mean, if wave 5 is not going to be extended, you'd put the 38 there. But at, you know, $55, that's still going to put us. I'm pretty sure that would still put us through. Well, that would line up right on the all-time high. So I guess, you know, the all-time high sort of around here is obviously going to be a point of interest. But, you know, there's not many left. We're sort of clearing them as we tick along. So that's how I'd map it out. Okay, that's kind of what I do. I just sort of look at that and think, well, okay, well, if you know, that would be how I would expect this to go. So, like I said, I was come back here to the daily. Like I said, this sort of wobbly correction in here that might be akin to that, and then once that is completed, and I'm not saying it might have completed already, but then what you'd expect is, you know, the 1, 2, 3, 4, 5 up to get the price targets up here. Now the RSI is kind of dipped below. Well, it's just hovering on that 40 line. So that's why I'm thinking maybe there's just a little bit more to go, and we're just going to see this cycle of the RSI play out, you know, back down to here, which might just, you know, coincide with us just coming back in to test some of this and, you know, maybe test that trend channel before we go again. So that'd be kind of what I'll be looking for is maybe the RSI to come down here to finish the cycle, and then we go up for another one. That would be how I'd sort of look at this as it sits just here and now today. But, you know, put all that aside, and, you know, we've just had these tops here that we've struggled to get through, and now we're just starting to peel away. And we know that the RSI has topped out at historically what's been quite a high point. So, you know, to expect this to turn down is not unreasonable. But, you know, the other thing too is the market doesn't necessarily have to plummet for the RSI to turn right back down. It can just start to track sideways, and like I said, maybe just come in and test a little bit of this, and that's still enough because the market then will just lack momentum. Okay, because we're only measuring really here that the strength of the up candles versus the strength of the down candles, and of course what we can see now is that the down candles are starting to get a little bit more prevalence in the series of the calculations, and that's what drags the index effectively down. So, you know, we might only come down to here on the weekly, okay? And we might even get that low, but then, you know, you can sort of see through here where it lined up, where it held through here. So maybe that's as far as we go, okay? And that just completes a little bit of the correction on the weekly before we go up and take out the top again. And maybe next time we don't quite get to those peaks, and then we start getting that weekly divergence, which would maybe warn that the larger move is over. But that, like I said, I'm more just basing off those price targets and just thinking about how we get there. But look, the same thing applies in this video and to this as everything else that I do, is that everything I've just said and demonstrated means jack shit, because the only thing that's important is this: where did price close today? That is it. That is the most important thing. Everything else is rubbish. Okay, basically it is. So where the price is king. Where did we close today? Well, we had a bit of a down week, but we're still well and truly entrenched in this uptrend. So, you know, you sort of want the market to flow through these uptrends. It gives it a steady base to build off. So, you know, a visit back to the bottom of this trend channel and just hold it would be good. You know, that's not necessarily a bad thing. What would I not want to see? I don't want to see this trend channel lost and then a test from above and then this low taken out. That would be not good. Okay, that would make me go back and revisit, probably back to my earlier assumptions that maybe we've had some sort of big top out here. But, you know, we've got the schematic, we've got these tops where the market's struggling to push through. But, you know, the fundamentals of the whole thing still look pretty good. So that's kind of where we see it. I'm just sort of piecing this together as I see it. So I don't know how much you got out of that, but hopefully it just gave you something a little bit different, something to think about. And if it did, great. So look, I'll leave it there for this week. Thanks very much for watching. Like I said, have a good Christmas, a good break if you don't celebrate Christmas, and we'll see you next week. Bye for now.